Hey, what's going on, everybody? It is Tuesday, January 25th. Well, once again, we had a big down opening, and then the market tried to rally, and then the rally fizzled out. And folks, now I'm just going to keep repeating to you that in the current fiscal environment, and believe me, I don't care about the Fed. I know everybody, that's all everybody focuses on. I know this. That's all everybody focuses on, because it has been ingrained into the minds of everyone in the financial industry, in the media, in politics, in economics for the last almost 50 years that it's all about monetary policy, it's all about central banking, it's all about monetarism. But that is all complete bullshit. I don't care about the Fed. I don't care about rate adjustments. I've explained to you a million times what rate adjustments are. They're price adjustments and fiscal operations. They're a redistribution of income. I care about the fiscal because that is either adding income and savings, financial balances, or stripping them away. Folks, first of all, getting back to the market commentary, you got to just now have a defensive posture. You got to sell rallies, okay? You see what's happening to the market. And I admit that the market now is very oversold. We're getting some readings like on put-call ratios where we could get, a couple of days, maybe a week of a bounce, but it's not going to be sustainable. We are going into a period of deep stagnation. I think the probability or the possibility of a recession is growing. It's pretty high. And I will tell you, the numbers today, the January monthly budget now is in surplus of 18 billion. So this is happening really, really quickly. And I want to really emphasize to you guys watching me, you're getting this from me first. I mean, in a couple of weeks when the official numbers come out, or at the end of the month when the numbers for the budget, monthly budget for January, when that's published, is going to come out as a surplus, and everyone's going to be cheering that. The White House especially is going to be cheering that, saying, hey, look, we got a balanced budget. You heard it here first. I am telling you this now. Nobody brings you this information in a more timely fashion than I do. And again, let's break it down. Why is this not a good thing? And I'm sure many of you have been taught or have been told that, the government has to run a surplus because we all have to run a surplus in our own financial balances, but it just does not work that way. All right? When there's only one way that there's two ways actually. The main way the U.S. government runs a surplus is by taxing more than it spends, which leaves us, the non-government, with less income, less savings, lower financial balances overall, and more debt, more indebtedness. Okay? I said there's a second way. The second way is if some other entity, maybe externally, like a foreign country, spends in excess. Like, let's say now China, it was a reverse situation, and China ran huge trade deficits and current account deficits because, let's say, China was the one buying from us in massive amounts. Let's say they ran the deficit and we ran the surplus. In that situation, our government could run a surplus. But because the whole world basically exports to the United States and the whole world basically saves in US dollars, they all export to us, the US pretty much historically always runs trade and current account deficits. So I'm just going to remove that from the equation. The only other way for the government here to run a surplus, they have to tax more than they spend, which means they're taking away income and savings and financial balances from us, the non-government. This is in no way a bullish development. Now, for those of you who have been following me for any length of time, you know that I've been bullish for a long time. And pretty much I've been saying buy every dip in the market, to the point where some of you, have called me like a perma bull. But I said that because the fiscal environment was extremely positive. We were the government was running large fiscal deficits, which meant large transfers of income to the non-government, to us. And during the pandemic stimulus, those transfers went up to historic levels. And it was very easy to be bullish under those circumstances. But now everything has turned around. And it has turned around very quickly. I mean, I have to say that I saw the trend of the slowdown in the fiscal flows, but I didn't see this turnaround in the deficit to surplus happening as quickly as it did. And man, is it happening fast. I mean, taxes are just flooding into the federal government, and the spending has slowed down to a very moderate pace. I mean, we're right now at a record level of tax deposits to the federal government. Employment and withholding taxes alone, well, that's the majority of taxes that the federal government collects. That's up 207 billion over last year. It's like 1.2 trillion so far. That's over 200 billion more in tax being taken away than where we were this time last year. I mean, that is just, think of that, it's just sucking out all of this income and savings from the private sector, the economy, the non-government. This is not a good development. Now, I can't wait, I have to tell you, and I've been saying it, I can't wait until the White House starts, bragging about this. Because it is just another example of the cluelessness of the economics profession, or our mainstream economics understanding, what is out there, the pervasive form of economics that we all listen to, not me, not an MMT guy, but what is put out there as, real understanding, which is completely backward. And it's going to be ironic. It's going to be actually comical, because they're going to be cheering the surplus as the economy contracts further and further, as unemployment rises, as the stock market sinks or languishes and does nothing. And they're not going to have a clue as to why. They're going to blame it on inflation. Maybe they're going to blame it on the Fed, because the Fed is going to raise interest rates by 25 basis points in March. Big deal. I mean, that would not have been a big deal at all. But this fiscal situation now has flipped around so dramatically and in such a negative way that the consequences are just, it's unavoidable what is going to happen at this point. Now, it could be avoidable if you had a really big tax cut, or if they increase spending substantially, but that's not going to happen, because you're just not going to get that passed politically right now. You see what's going on in the Senate. But who knows? Maybe Biden will start a war with Russia. I mean, I'm sure both parties in the Senate and the House would go along with that. But at that point, what? We're all going to be dead anyway, because it'll end up into some kind of a nuclear war. I mean, but I wouldn't put it past him that he starts a war with Russia, as a means to, stimulate the economy. Let's hope he's not that stupid. Anyway, that's where we are. We're in a really, what's the word? We're just in a really lousy fiscal environment right now, and that's just going to turn the economy into a very weak and terrible economy. And I just cannot be bullish on stocks. So you have to take the opposite strategy now, and you have to sell the rallies, buy some downside protection, buy some puts, be patient. I don't think this is not a crash. Crashes usually come, when some event suddenly is triggered, or some event suddenly surfaces that creates a situation where everybody runs for the door. But this is just going to be a reflection. The stock market is going to reflect a contraction in the economy into a recession. We got the first down leg, which is happening right now. We'll probably stabilize at some level, but it's going to go down, down, down until, at some point, the automatic stabilizers kick in. I talked about that yesterday, but we're still a long way from that. I hate to bring the bad news, but it is what it is, as they say. Anyway, that's it for today. See you tomorrow. Bye.